looking like for you as the new chairman at State Bank of India?
Yeah, thanks for having me on your show, Vishwanathan. And SBI, we are here not on account of speed, but on account of direction and intent. The right direction, right intent is something what brought us here in terms of the size, in terms of the positioning. So that philosophy of pursuing those objectives will remain. I think that's the first thing I would like to say. But the strategies in terms of what needs to be done on the business, in terms of our strategic directions, in terms of technology, what I intend to do is that in the last 3 to 4 years, we built a strong balance sheet. We have invested significantly in the technology and digitalization. Now we have to leverage on that. The leverage is of two kinds, in the sense that, we have unparalleled branch presence, ATMs, business correspondents. And how do I marry this technology and digital to reach across the channels and increase the productivity would be my first priority. The productivity gains on account of the technology investments would be the focus. So the second feature would be that we have been secularly growing. While we had a large retail growth for a couple of years, and when corporate credit growth was not happening. Today, if you see, retail, personal, MSME, agriculture, corporate, almost having a double-digit growth. That means my focus on a particular segment is not there now. I need to grow in all the segments, and I have the potential to grow. But among them, if I have to take out, and I see that there's a good amount of income potential, earning potential in the MSME now, today. Okay. And we believe that the kind of data set what is available in terms of GST, in terms of our own account statement, analytics, the MSME lending is much more confidently we can lend to the MSMEs than what we were doing earlier. Right. So the focus would be on the business front. These are the areas which we are going to do. And for all these things, the central agenda would be the technology and digitalization. As you know, 2.0 also is going to be something which is going to be available during this period. Right. And which is going to completely transform the customer experience across the channels, omni-channel experience. So if I have to, my answer sum up, these are some of the things, but I think there are a lot of elements which go into it, to achieve these objectives. Okay. I'm not getting into the numbers. Obviously, the numbers, you will definitely come to that numbers later. I'll answer them.
Okay. Let me break this up now entirely. You've got a massive loan book, right? And equally massive deposit. In fact, your deposit book is larger than the loan book currently. As a lender who's currently looking at the macro environment as well as the environment in the banking sector, growing a big book like yours in an extremely competitive sort of landscape, whether it be liabilities or assets, how do you think that will go by in the next 3 years?
Yeah, one thing what at the management level we decided, and even the board level we have decided that our growth will not come at any cost. If I said in some context also that if I'm fighting for deposits or competing for deposits, I would compete on non-rate war. I don't want to get into the rate contest. Yeah, I would like to improve the service quality. And our customer base is huge, and some of them probably not happy with some of the services. How do we bring them back? We have identified the whole universe of our customers who are the promoters who are promoting our services. Their SBI is good. You please bank with SBI.
Okay.
And then we have stagnant customers. That means, they have an account but have not been transacting. We would like to reach out to them and ask them what makes you to come back.
Correct.
And there are attritors. They're leaving. Some of them probably are leaving for some reason. We would like to find out, what are those reasons which are making them to leave. In the sense that our effort would be to fight on non-rate, contest, not on the rate war.
Okay.
So is the case with on the credit. When you talk about credit, the credit growth we would like to do without compromising our underwriting standards. I think this is something which we hard fought and established.
Yeah.
Very, very strong underwriting standards today. And there is no way we can compromise on that. And even if the book grows a little slower, it's fine with us.
Okay, fair enough. Coming within the lending ecosystem, two major parts. You've got a non-wholesale and a wholesale piece. Within the non-wholesale piece, you've got retail, you've got MSME as one of the focus areas, as you mentioned. I want to touch upon retail and then come to MSME. First, retail, extremely competitive. Unsecured, not so exciting for lenders at this point in time after the Reserve Bank of India raised some concerns. And of course, you are seeing some amount of slippages on that side as well. You in the sense, I'm saying the banking system, SBI not so much. To your mind, what is retail growth looking like for SBI, for the ecosystem? Do you think that maybe the times of that extremely 30%, 35% growth is sort of behind us now?
Yeah. I think the CAGR of 30-35% what we witnessed may not happen for two reasons. I think there was some pent-up demand which had resulted in that kind of growth.
Yeah.
Obviously, it will moderate over a period of time. And the RBI measures also definitely have impacted the unsecured loan growth rates. But in our book, if I have to talk about SBI, as we keep on saying that, there are unsecured loans and there are unsecured loans of SBI.
Okay.
So our policy would be that how do we strengthen and expand the user base? We don't want to give unsecured loan to the same person.
Correct.
So we have a significant number of salary package account customers who have not taken this unsecured loan yet. So we would like to reach out to them.
Okay.
And I think our potential is there. I'm not saying that we would be witnessing 30 to 35% growth rates, what we've had earlier. Obviously, to cover on the additional risk weights, we may have to increase the rates. Some amount of rate increase probably would happen in the unsecured loan space. But our effort would be to get the best quality customers into our books.
That's the unsecured piece. Now, on the secured side, under your predecessor, the focus on the home loan has come back, pushing that product as one of the major drivers of your retail book. Where does that go from here on? Because the reason I'm saying this is because hopefully the rate cycle is going to turn. So there is an expectation that the demand is going to pick up again. And home loans.
The demand is still there. I think we are doing, the run rate is very good on the home loans. And I don't think there is any concern in terms of the home loan growth rate. I think that is one product which is doing extremely well in our books. And we'll continue to do that. And today we have the largest number of processing centers across the country, home loans. I don't think anybody else has got so many processing centers, which has reduced the turnaround time. Today we are able to give a home loan in 5 days. Okay. So we are not only competing, yes, our rates are customer friendly, competitive rates, but beyond that rates, we are also providing the excellent customer service. We are one of the most trusted home loan provider in the country. We do extreme due diligence on the builder and the paperwork. And these are also some of the USPs which are not visible to anyone. Yeah. But people would like to take home loan from SBI because of the due diligence which we do. And we protect the customer interest when they are buying the property. So I think that home loan book and the secured retail personal portfolio, I think that will continue to grow. That will be one of the flagship products for us.
A flagship product. Coming to the other focus area that you mentioned about MSME, what took bankers so long to realize that, okay, this is a growth area? Because, there was about 10 odd years of corporate credit growth, which then translated into retail credit growth. Now, finally, lenders, especially somebody size of SBI, is talking about MSME as a potential growth area. What is it that kept lenders out of the ecosystem so far, and what is it that you're seeing at this point in time that's changed for you to enter?
See, we have been traditionally lenders to the MSMEs.
Yeah.
While the growth rates have been impacted, we were always the largest lender to the MSME. Even in the worst times, I think our MSME book was largest in the industry. The growth rate was lower. Essentially, I think some of the factors which had impacted MSMEs, where, who were dependent on the large corporates, and when the large corporates got into trouble.
Correct.
Obviously, they also had and they didn't have the bandwidth to handle the issues which they have come out with. That made the growth rate slow down, and even the absorption by the MSMEs itself has come down. But today, I think MSMEs are also doing well, as the corporates are doing well.
Okay.
Number one. Number two, my ability to assess the needs of the MSMEs in a holistic manner, without depending on the piece of paper what MSME is giving to me, a balance sheet or a P&L. I have a host of data which is available. Whether it could be bureau data, it could be a GSTN data, or my own internal account data, which I'm able to triangulate and tell them that this is the loan limit which is available to you. So my ability to assess MSMEs, not the medium-sized entities, but mainly the small size, up to 5 crores. Today, up to 5 crores, we have completely, assessment is moved to a business rule engine based.
Okay.
That means, if a customer comes and gives his PAN card, I don't need any paper, just PAN card. In 15 minutes, I will be able to tell him up to 5 crore rupees whether what is the loan amount which he is going to get. So I think this confidence is what is somehow driving everyone, not necessarily SBI. I think the whole system is growing at 20%.
Correct.
So the confidence level on the governance part and in terms of the data quality part has improved on the MSMEs, which is making the lenders to definitely go on. And the second important element which is also contributed is CGT MSC guarantees available up to 5 crores.
Okay.
Which is a good development.
Okay. So for the bankers, there's that amount of confidence for those smaller loans. Got it. Let me touch on the wholesale piece now. Private capex has been making a comeback for 3 years. Finally, seems like it's here. There is some amount of rejuvenation within the corporate segment. In fact, we had the RBI governor just talk about the fact that companies need to start coming in and really needs to start spending. As a lender who's active in this space and is probably going to lead the charge as far as private borrowing is concerned, how do you manage that growth without compromising on risk, without compromising on any kind of pricing issues? Because pricing has been a big talking point as far as corporate lending is concerned.
No, I think these two things I already told you that we have set up underwriting standards, whether it is a retail, whether it is MSME, whether it is agriculture or corporate. I think our underwriting standards, we are not going to compromise. When I say underwriting, it's not about the paperwork. It's about the way we assess the project. For example, maybe, a few years ago, if a road project is there, we were trusting that the land will be available, right of way will be available. And even with 50% right of way, probably we were giving the money. Today, our underwriting standard says that unless 95% right of way is available, not even 1 rupee is given to them.
Okay.
Which means that our and the whole ecosystem also has changed, and the quality of equity has changed, and the promoters are willing to bring the upfront equity available in the form of private equity or their own cash accruals, which they were able to make in the last 2-3 years. That means the upfront equity is available. And we are insisting that, whatever statutory approvals are required, the statutory acquisition of land is required, that needs to be in place. So which gives us confidence that, the kind of cycle which we have seen will not happen now. That is on the underwriting side.
Okay.
On the pricing side, I certainly believe that I think the risk is not being priced properly in the corporate side.
Even today.
Okay. And we don't want to get into that situation. I personally believe that with project finance, where the risk of execution are there, that execution risks have to be properly priced.
Yeah.
Once the execution risk is over, it can move into a securitization deal where the pricing can be a market-related pricing. I think it is important for all of us, lenders, particularly in the corporate banking and project financing, to realize that the execution risks have to be priced properly. And we are not compromising on that.
But doesn't it make it difficult to grow?
I think people also come to us because of our ability to assess a project.
So it's not just
price a project. It is not about pricing alone. Yeah, once the execution is completed, obviously the price war starts, and so they go around shopping. But as far as project financing have been issue, I think it's still SBI is a preferred bank.
Okay. One of the features of the previous boom cycle within the corporate finance space, especially project finance, was the fact that a large lender such as SBI or one of the other larger PSBs, they commit to something and then a whole host of smaller banks start coming in. Right now, the draft norms that the RBI has proposed sort of puts an end to that discussion entirely. But the draft norms also create other issues that lenders are not very comfortable with, especially with respect to provisioning. How are you seeing the emerging regulatory environment and your growth in that context?
So the project finance provisioning and other guidelines still are yet to come. I think the draft guidelines are there. Without getting into the provisioning part, I think there are good elements. For example, I think the large number of banks being on the project finance without having the ability to assess a project.
Yeah.
See, even if it is primarily assessed by a large bank like SBI or any other bank, I think each of them have to take a call based on their ability to assess the risk and understand the risk. So if it means that, the number of banks participating in the project finance is to be limited, I think that's not a bad idea in my view. So today, I don't think there is a large number of private small banks coming in on the project. Project financing is still restricted to a dozen banks, not beyond that. So, and in the meantime, I think some of the banks which did not have the capability to assess the project also have developed those projects.
Yes.
And some of them completely exited anyways. So they're not anywhere there. Even today, they're not coming in. So that risk of, some large bank being blamed for assessing and then taking participation, I don't think is there.
Okay.
I'm sure each of them have capability to assess. And if they have no capability, I think they should not participate in the project finance.
So the reason I bring this up is because like you have the ISI mark on kitchen household items, the SBI mark was one of those things that project financing used to just look at and believe that there is no reason for us to look beyond that. Maybe that was probably not the right approach for the smaller lenders then.
Obviously.
Let me come to the big question of this current environment, which is on the liabilities front. Now, one part of the market says banks are not giving enough to depositors. That's why depositors are not putting money and money is moving into capital markets, and that's not real. The other part says that that's a silly argument. Whether it's capital market or not, it's still within the banking system. But the reason deposits are not there or not growing enough is probably because the liquidity has been kept tight on purpose. There is a tightening cycle that is still in place, however short it might be left now. To your mind, as a banker in the current environment, I know SBI itself doesn't have any liquidity concerns, but for the broader system, what needs to be done?
In terms of deposits, I think there is some movement away from the banks.
Yeah.
It is also a fact that some of the money which goes into the other investment assets, a part of it will remain in the bank in some form or the other. But it is also important that some of the money which is going to mutual funds, even if it is coming back into the banking system, it may not come as a deposits. It may come as a borrowings, for example. So overall liquidity is still available in whichever category it is going. But it is also a fact that I think much of this comparison is also happening because the credit growth is higher than the deposit growth. Deposit growth rate is definitely lower when compared to 20 and 21. We had highest net financial savings in FY21.
Correct.
So when compared to that, the savings rate looks lower, and coupled with the fact that the credit growth is also happening, the contrast is stark now. Many of the banks are trying to reach out to the customers and explaining them that even if you have a certain amount of corpus to invest, the asset allocation is important.
Yeah,
I think while we are not saying that don't invest in mutual funds or equities, I think a judicious mix of investments is required, and the bank deposits are required to continue to be in your portfolio. I think that is the outreach what we are trying to do with the customers.
correct.
Globally, in the last 1 decade, I read one article in the Banker magazine. Across the globe, for a decade, bankers have forgotten what is deposit mobilization, because the deposit kept coming.
Correct.
Probably we all have to go back to our roots, start focusing on the deposit mobilization, start focusing on the customer service, and also innovate a little. Maybe we can combine a deposit product, an SIP product, and an insurance product. Within the regulatory guidelines. How do we offer a combo product is something what the innovation Ms. RBI is also talking about. Not only on the rate innovation, that's the easiest thing to do. Just give 50 basis point more, probably some deposits will come. But essentially focus on the customer service, customer retention, and customer education. I truly believe that many of the banks have excellent reach, and that reach has to be utilized.
Okay. One product that your officers are also focusing on is on the wealth banking. That's obviously something that is usually linked to foreign banks and how they do wealth banking, because they target the HNI clients. But as a lender as big as SBI, lender to every fourth Indian, every third Indian now. Yes. So with that kind of reach, how important is wealth banking for you, and does that play into this deposit strategy as well?
Yes, wealth is important. I think what we have looked at our customer base is that there are customers who look for wealth advisory and wealth products and wealth management, and there are also high net worth individuals who want good quality service. So we have created a separate niche for them called Premier Banking. Before they actually move to the wealth banking, what kind of services they are looking for?
Okay.
And what they are looking for is a personalized service. So we are trying to, we have already rolled out, almost 2,000 relationship managers for Premier Banking. I'm not talking about wealth. Wealth is a combination of,
correct,
banking as well as other financial services products.
Yes.
But these Premier Banking customers are looking only banking services, and they have a significant relationship value with us. So our approach is that we ensure that the Premier Banking customers get good quality service from us, and doorstep banking services or any other advisory which they want before they move to the wealth. But wealth is got a great potential in SBI. We have strengthened our feet on street relationship teams, virtual relationship teams. And we also realize that there's a lot of wealth product demand, wealth services demand among the non-resident Indians.
Okay.
We have a significant NRI customers. So today we are trying to establish wealth hubs, both in Dubai and Bahrain, where we have offices to service to the NRIs on the wealth customer base. I think wealth is going to be one of the significant activities which we are going to drive. We have strengthened our teams. We have strengthened our technology. We have strengthened our reach.
Oh, fair enough. I want to focus on 3 final questions before we wrap this up. The first one is with regard to a new announcement by the Reserve Bank of India governor on ULI, which is the Unified Lending Interface, which he's claiming is what UPI did to payments, ULI will do to lending. As a large lender, what is your expectation from this open platform for lending?
most of the financial services, similar to what happened in e-commerce and all, platformization is happening. This platformization can be a private platform or regulatory platform.
Yeah.
I think some of the redundancies what now in the system can be taken out. For instance, if 10, 12 banks have to individually integrate with a service provider, who is give an example of a crop loan. In a crop loan, there is satellite image which is being provided by a service provider. Yeah. Just giving an example. But if I have to integrate with him, 12 different banks will be integrating. 12 different banks will be negotiating on the price. Imagine if ULI can provide that platform. The service providers are available there on the platform. Integration has already happened. I just have to plug into the ULI. There could be several other services which can be provided on that. It could PAN verification, many other things which they are building on that platform. And the lenders' ability to integrate with those service providers will tremendously increase. But it is only service. Next stage would be that whether we can bring the lenders and the borrowers or depositors on the platform. Of course, this is primarily a lending platform, so the borrowers only will come and see the marketplace. This is like ONDs, you just see the marketplace and see which is the bank which is offering the best home loan rate. And then choose a bank to start the journey.
Correct.
It has got immense potential. So then what happens, the banks will get benefited because there is a quick integration with many of the service providers. Then you also have a larger platform, what you get. The third thing is that your post-sale service has to improve. Ultimately, any platform will commoditize the services. That's what happened in many of the e-commerce platforms also. So non-commoditized item which will remain in any service industry is the quality of service.
Correct.
So we need to focus on what would be my, if a home loan is I'm acquiring through ULI, what would be my post-sale service? How best I can serve the customer? How do I deliver subsequent to bringing him on board? So I think it's a huge potential which is available in the ULI. Hopefully, I think we will be able to have many service providers coming in there and integrations happening.
The last two questions. One is on the valuation that SBI enjoys. There was a big run up in the valuation in the last 1 year or so. However, Mr. Kara, your predecessor, was not very happy the way the market is valuing SBI. What does Mr. Setty think of the market, how they view SBI, and what is probably not being factored in as far as SBI is valued?
It is our collective view. I think still valuation, we have much valuation left to be recognized. If you see the price to book value of our bank and when compared to the other peers, the potential and the consistency of the results what we have provided and the shareholder value what we have created, I think I'm sure we deserve a better valuation than what we have today.
Okay. You in your letter to your employees, one thing you mentioned was with regard to this is India's decade, but it's also SBI's decade, or you want to make it SBI's decade. Do you think that that's where this valuation question gets answered?
So the valuation is an important indicator of how the stakeholders perceive you.
Correct.
While we have never played to the market is important to us. We are a listed company, and what we always have been focused. When I said that if India's decade has to be SBI's decade, is to align our SBI priorities and SBI growth being a proxy to the economy. I think it goes hand in hand.
Okay.
The valuation definitely will have to be reflected in the way we perform consistently. I think consistency becomes one of the important things. So I'm sure the valuation will get reflected as the economy of India's value also goes up.
What is that one challenge that's probably not looking very scary right now, but definitely needs to be addressed in your mind?
I don't call it scary, obviously, is that, but the challenge, nevertheless, is cybersecurity. I think it's a universal problem, but cybersecurity in the financial services is extremely important because there is a customer protection involved. It's not only about the company getting impacted. So if I have to single out one non-financial challenge, it would be cybersecurity.
All right. Thank you so much, Mr. Setty, for this conversation. Absolutely love this chat with you. And hopefully we'll keep talking.